How to trade using the MACD indicator? Hello, this is David, and you are on the Binarium Trading Platform channel. Here we discuss effective technical analysis. On the Binarium platform, we can trade using the Professional Trading View chart. To access it, click on the icon in the top left corner of the screen, then find MACD in the indicator section. Let me start by explaining what this indicator is. MACD stands for Moving Average Convergence and Divergence. In simpler terms, it refers to the convergence and divergence of moving averages. This is a popular technical analysis tool that helps us identify trends and reversal signals in financial markets. It's worth noting that it provides numerous signals. With TradingView tools, it's easy to mark reversal points on the chart using the MACD. The MACD indicator consists of three components. The first is the MACD line. This line represents the difference between two exponential moving averages, EMAs, with different periods. Typically, a 12-day and a 26-day EMA are used. The second component of the MACD indicator is the signal line, which is usually shown in red. This is a short EMA, generally with a period of 9. The signal line is used to generate trading signals. When the signal line crosses the MACD line, it indicates a possible trend change. The third component is the histogram, displayed as bars in 4 different colors. It shows the difference between the signal line and the MACD line and indicates the trend's momentum. For example, light pink bars represent a weak bearish signal, while red bars indicate a strong bearish signal. Light green bars suggest a weak bullish signal, and bright green bars indicate a strong bullish signal. Let's see how the MACD works in practice. We'll start with the signals that occur when the MACD line crosses the signal line. There are 2 possible scenarios. The first is when the MACD line crosses the signal line from below. This is considered a bullish signal, meaning an upward trend. Right now, on the chart, we see an example of this situation. The market sentiment has shifted. Active selling has turned into buying. This is indicated by the MACD line crossing the red signal line from below and moving upward. This is a signal to go up. We can also see bright green bars on the histogram indicating the trend is gaining momentum. Therefore, I open to trade up. The second scenario is when the MACD line crosses the signal line from up to down. This is considered a bearish signal, meaning a downward trend. Let's analyze the signal in practice. In this example, we see that the price chart is within a descending channel. Looking at the indicator, the MACD line crosses the red signal line from above. The signal line is ready to continue declining. This is a strong down signal, so I made a trade down. We also get trading signals when the MACD line crosses the zero line, which is the line around which the histogram is built. If the MACD line crosses the zero line from up to down, it may indicate the start of a downtrend. If the MACD line crosses the zero line from down to up, it may signal the beginning of an uptrend. For example, here we see that the price chart is ready to break out of consolidation. The MACD indicator is holding above zero. The lines are moving upward, and the histogram bars are bright green. This is an additional upward signal. Now let's talk about the MACD convergence and divergence. Convergence is when 2 lines move closer together in the same direction. Divergence, on the other hand, is when the lines start to move apart, signaling confusion. In this case, the trend has ended, and it's time to trade the reversal. Visually, convergence appears as almost parallel, unidirectional movement of the MACD line and the signal line. During a strong trend, these lines move apart from each other. However, when they start to converge, it suggests the trend is slowing down and might be about to change. For example, if the MACD line is above the signal line, but they start to converge, this could indicate that the upward trend is losing strength. Divergence, on the other hand, looks like tangled lines that may have just unraveled or are about to. Divergence signals a trend reversal. Let's look at this chart. Here we see that the price is ready to reverse against the downward trend. The MACD indicator signals this. where the lines first converged and tangled, indicating a trend change. Then the lines diverge with the MACD line crossing the signal line from below. This is an upward signal. Meanwhile, the reversal trade has closed with a profit. Let's summarize. Like any other indicator, the MACD has its pros and cons. Let's start with the advantages. First, the MACD is relatively easy to understand and use. Second, it is excellent for analyzing trends and identifying reversal points. Third, it can be used on various time frames, starting from 3 minutes and up. Now the drawbacks. The MACD generates many signals, which can be confusing. The indicator may lag because it is based on moving averages. In sideways markets, or when the market is flat, false positive or negative signals can occur. Overall, the MACD is a powerful tool in a trader's arsenal. However, like any indicator, it should be used in combination with other analysis methods to improve forecast accuracy. That's all for now. If you have any questions, leave them in the comments.